Firstly, try to analyze the market sentiment based on domestic conditions and global markets. Avoid trading before major events such as RBI policy. See how Nasdaq and Dow Jones closed last night and what Gift Nifty is suggesting. Second, mark important levels in the chart such as resistance and support. Keep the chart as clean as possible. Rely very less on indicators and more on price action. Resistance and supports are supply and demand zones, from where the price has gone down and gone up respectively. Third, do not just jump into a trade as soon as the market opens. It is better to miss a trade rather than taking a wrong trade. Wait for some solid price action to form. See how the market behaved in the last few days. In case of Nifty 50, double bottom, double top, retracement entry, breakout and breakdown retest works great. Fourth, location of the price action is very important in a chart. Indicators I generally use are CPR and support resistance and 20 AMA. If bullish price action is formed near the support and bearish price action near a resistance, it becomes a high probability trade. Next, we have few examples for the patterns. You can understand the double bottom and retracement patterns. Fifth, always plan your trade before executing. Also keeping proper target and stop loss is a must. Always start with one lot in options, no matter how rich you are, and stick with it for at least 3 months till you are profitable for continuous 3 months. Always calculate your target and risk amount you have to take. Lastly, after a trade is executed, stop loss and target decided, it's time to listen to music and chill and let the market play its role. Don't look at profit and loss every time after placing trade. Keep in mind, trading is the hardest way to make easy money. Happy trading!